Yeah, welcome everyone. Good evening. You're welcome to today's class. I am Nicholas Nitrix, and today we'll be discussing on market structure. Discussing on market structure and like market structure in forex trading is the overall pattern of price movement that shows whether the market is moving up, bullish, down, bearish, or sideways. Market structure is the overall price pattern. It shows the overall price pattern. The pattern of the chart is called market structure to know where price is coming from and where price is going. Let's take that as a jot. Market, okay. Market structure is the overall price pattern on the chart. It tells us where price is coming from and where price is going. It also tells us where okay it tells us if market is moving upward, which is also known as bearish, also known as bullish, and if market is moving downward, also known as bearish. There's another movement of the market which is called the range movement. Market moves sideways without clear direction. Alright, so having known the definition of market structure, and now we have the various types of market structure, and you can even find them the in the definition of what market structure is. We have the uptrend, we have the downtrend, and we have the ranging market. The uptrend is also known as the bullish market structure. The downtrend is also known as the bearish market structure, and the sideways movement, as it entails, is the ranging market. So this is a pattern. This explains what market structure means. And in the market structure, we have the high, the low, the higher high, the higher low, the higher high, the higher low, the higher high, the higher low, and like that goes and goes like that. Goes like that. And this type of market structure is called the uptrend. Uptrend also known as the bullish trend, also known as the bullish trend, where we have the high, the high, have the high, you have the low, you have the low, and we have the higher high, you have the higher low, we have the higher high, we have the higher low, we have the higher high. This is what market produces whenever the trend is bullish. Higher high, the higher low, and like that, and so forth until market changes structure or character. Until market changes structure. Yeah, as you can see from this diagram, we can see that we have a high, we have the low. Market is coming from this place, this point. We have a high, as we have a high, we have a low, and now this low breaks this previous high to give us a new higher high, and this higher high drops down to give us a new higher low, higher than this previous low, and then market goes push forward again, swings high, and breaks this previous higher high to give us a new higher high, and now market comes down again, retraces down, and push again to break this structure, to break this structure, to push to the upside, giving us another higher high, and like that till market now decides to change direction or character. So that is it for uptrend. This is an uptrend market, and to have the downtrend market, which is the bearish, is just the opposite of the bullish market. The bearish market is the opposite of the bullish market, whereby we have it like this: market coming from up, goes down, gives us a low, and then retraces up, then breaks that structure of the previous low again, and retraces up again, and breaks the structure to give us another lower high, and it breaks up again, gives us a lower high, sorry, gives us, this one is the lower low, gives us the lower high, now breaks structure again to give us another new lower, another lower low, and breaks retraces to give us a new lower high, and so on and so forth, and so on and so forth. Market comes from here, a high, and we have a low, and market gives us a retracement, making it a lower high, and breaks this structure of the previous low to give us a lower low, lower than the previous low. Don't worry, when we get to the chart, we can see the practical example of what I'm explaining right here. So now it creates another lower high, and market breaks structure again to give us a new lower low. Market retraces up to give us a new lower high, and then breaks this structure here to give us a new lower low, and so on. This is just a typical example of how market reacts and plays out in volatility hour. Then we have a lower high, and that like that gives us a lower low till market break structure, till market, till they are called the till we have a market shift. A market shift occurs when the lower high is being broken to the upside. Market changes character, changes direction, breaks up. Then we know that market has changed direction, now becomes uptrend. So without that happening, market we will say this market is bullish, bullish trend. This is sorry, this is a bearish trend. This is a bearish trend. In other words, it is called a downward movement or downtrend. I can ask you what's the market structure of Euro GBP, what's the uh, market structure of CAD JPY, what's the market you can just check it. Is market bullish? What I'm trying to ask you to tell me is market bullish or bearish? If you check it, the up high, low, higher high, lower low like that, you will know if market is bearish or bullish. So now let's have a practical example. Let's go to a daily time frame. And lest I forget, you should know, have it at the back of your mind that we have the major market structure and we have the minor market structure. And your major market structure varies from the kind of trader you are. If you are a swing trader, your major market structure starts from the daily time frame, the weekly time frame, or can even come down to the 4 hour time frame. That's your major market structure. While your minor market structure occurs on the 15 minutes time frame, 30 minutes time frame. That is for the when you are a swing trader. If you are a scalper, your major time frame, major market structure starts from the 15 minutes. You can start from the 15 minutes time frame. That is your major market, and can go as low. Your minor market structure can go as low as 1 minute to 5 minutes time frame. That's it. If you're a day swinger, your major market structure can range from 30 minutes to 4 hours, while your minor market structure can be as low as 5 minutes to 15 minutes time frame. So let's head into the chart. I don't want this class to be long, so we'll be as fast as possible. Okay, so now as you can see from this range here, let me indicate it. So from here, from this point to let's have to this point, we can see that from this vertical red line to this vertical red line, the interval, the market structure within this interval is the uptrend. Market is heading towards, price is going up, price is going up. Another way for you to know if you open your chart and you feel confused about where price is going to, the easiest way as a beginner to know the trend of the market is to use your line chart, and you can find it at the top tools on the screen there. There you can see that line over here, the line there. Just click on it, you see it has changed to a line chart, and easily you can recognize if price is going up or going down. You can easily recognize it, and you can also draw your market structure. You can draw out the market structure and the price pattern with the line chart. So now let's head on to the candlestick. So now from the candlestick, like I said, on an uptrend, we have a low, high, low, higher high, higher low, higher high, higher low, higher high. So now from what we did, let me bring what we did closer. Where is it? Okay, it's on 30 minutes time frame. Okay, now this diagram. So let's this diagram, this uptrend diagram, let's achieve it on that chart we drew out. Where's this thing? The 4 hours. On the 4 hours. Let's go to the 4 hours. Yeah. Pa, 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 da. Okay. So now this is what we have here. This is how it is. It starts from here, goes up to this point. This is high, and market drops down the low. This is the low we have here, and then market breaks. You can see. You can see market broke this high to give us this high here, this new high here, which is the new higher high, and this is it. This was the new higher high. Now, where did market retrace to? The lowest part market retraced to is this point here, right here. You can see is this point here. Now you click on it, and now here's the next high market went to. This is the next high. Market broke this, and this is the next high it went to. It went to this high, and it retraced. This is the lowest. This is the lowest. Came down here. This can be very tricky, so you have to take your time. You'll be able to achieve this. When I started trading newly, I couldn't. It was difficult for me to draw out market structure, to draw out the trend. So, but with time and practice and experience, it will make it very easy for you. So now market breaks this high here to give us another high, a new high, which is higher high, and now market we have it here. So now market retraces. Retraces. It did not break this lower low. No. In our next class, we're going to discuss about market structure shift and change of character. It did not break this. Had it been the market broke this low, then we can have a market structure shift. But since it did not break, price is still up. So this is the lowest it went to. And now, boom, market. This is the break of structure here. It broke this structure, and now this is the least, the highest it went to, and now it retraced. It can be a little bit technical, but with time you'll be able to understand it. Now this is the lowest market retraced to, and then we have a swing high that broke the structure and to this point here, right here. So this is it. This is it. This is the structure. This is a clear structure of what we have here from this point to this point. From this point A to this point B, this is the market structure. This is the market structure. The high. So now let me draw out the break of the structure. This is the break of structure. This is the break of structure. Market broke this structure here. Went high, retraced, broke this structure here. Went high, retraced, and then broke this structure here again. Went high and retraced. The retracement almost broke this previous low, but it didn't. It didn't. So still maintain it. And now this previous low gave us a break of structure here to the upside, and now this up here, this high had a retracement down here and then broke this high here to the upside. So now this is a clear market structure for this chart right here on XAUSD 4-hour time frame. And this, as a swing trader on this time frame, this is your major market structure. You can go down to 15 minutes time frame or 5 minutes time frame where you will get a minor market structure within this long within this swing here, this high and low, this low and high here, we have a market structure in it. There's a market structure. It is called the minor market structure. This is it. This is what we did. This is what we did, right? Yeah. So within this, where is it again? So within this swing here, this swing I from here to here, you can see this another minor. This is a minor structure. So when you go to a 15-minute time frame or 5 minutes time frame, you'll be able to draw out the minor structure in this major structure, market structure. So that is that for this class, and see you on the next class, which is the market structure shift and change of character. Thank you very much.